To the Peterson Institute for International Economics. Thank you for joining us this morning. I'm here enjoying with Sir Paul Tucker the fact that not being officials doesn't mean we have an embargo time, and therefore promptness is not quite as much of a virtue as it once was. Anyway, we're here for an important discussion to broaden our thinking and our understanding. Sir Paul Tucker, former Deputy Governor of the Bank of England, currently fellow at the Center for Business and Government at Harvard, has of course been at the center of monetary policy, but particularly global bank regulation for much of the last 2 decades. He has of course served with me, or I with him, on the Monetary Policy Committee of the Bank of England, and he was a founding member, one of the designers of the Financial Policy Committee at the Bank of England. He headed up various committees with various acronyms at the BIS, which I'm sure my distinguished colleagues from the Federal Reserve all can rattle off. And importantly, he's in the midst, having left the Bank of England, of wrestling with some of the most fundamental issues for how we think about international regulation in the aftermath of the financial crisis. And I want to commend him today for sharing with us his work in progress, his thoughts, and his recommendations on issues of true democratic accountability. What should we be doing in a world where unelected central bankers and the FSB and other fora are making up their minds about things that are of critical importance to citizens throughout the world, but nobody elected these folk? And we all, especially here in the Peterson Institute, but I think throughout the central banking and the financial community, understandably put a huge weight on the virtues of expertise and understandably want there to be true intellectual debate. This is on the record, but sometimes when you're hashing out regulations, they genuinely do not have to be on the record during the discussion, because otherwise no one will ever debate, take a position, change a position. It's not just about transparency. Paul will give you a much richer presentation than that, but it's really about, if you have democratically elected officials who either don't know or don't care, or only care sporadically about these issues, how do you affect governance? And if things are decided at the international level over the wishes of national representatives, how do you manage that in today's world? I'm very pleased as well, and it's a tribute to Paul as well as to our community here at the Peterson Institute, to have 2 great discussants of Paul's remarks who will follow him. Ted Truman, who of course was the international side of the Federal Reserve, then was Assistant Secretary of the Treasury, and as for, God, it's a lot of years now, been a senior fellow here at the Peterson Institute. We'll give the somewhat guilty but proud former official's perspective on how to make this work. Sitting next to him is Jo Marie Griesgraber, head of the New Rules for Global Finance Coalition, which has been a leading voice in a constructive way for trying to rethink some of the democratic control issues on these issues. So again, thank you all for joining us today. Thank you for joining us for breakfast in particular, and I turn it over to my friend Sir Paul Tucker.
Adam, thank you so much. Thanks for inviting me to be here. I'm sorry it's taken me a year. I had a great day yesterday, and thanks for inviting me to do this this morning. And thanks to the 2 discussants in advance. I better get this in first. Ted's of a generation of central bankers ahead of me. He worked incredibly. When I was private secretary to the governor of the Bank of England, Ted Truman was first a name that I knew before I saw physically, because Ted worked so closely with Andrew Crockett, who was in the other next door room to me, and we both remember Andrew very fondly. And Jo Marie, thank you very much for doing this. I don't know what you're going to say, but since I want to engage with issues of democracy, I'm actually flattered that you should take the trouble to come and talk about some thoughts from a person like me. This may be slightly frustrating to people in the audience, because in a way this is the 5th of 5, conceivably 6, pieces of thinking about what it is to be an unelected, powerful, independent official setting national and global policy. And it's a rather remarkable thing. In my retirement speech at the Bank of England, I closed by saying what an extraordinary privilege it was to testify to our Parliament. And actually, even as I recollect that, it was the only point of the speech which I found at all kind of moving. I think it is an extraordinary thing to be unelected and powerful in an independent agency. And I think that the community that I was part of has probably neglected to engage with the community, the scholarly community beyond economics, about what this means. I think Stan is an exception to that, and everybody knows about the paper he wrote with Guy Debelle 20, 30 years ago on the difference between objective independence and instrument independence. Let me give you an example of what I mean in the international context. And I'm going to start off with domestic initiatives, and this is for a purpose. So you think about the Volcker rule, or in London, the Vickers policy, or in across the EU, to a slightly lesser extent, Liikanen. Anybody who isn't absolutely in the thick of things could be forgiven for thinking that these issues are absolutely top line in solving the problem of too big to fail. One was announced by the President with a former Federal Reserve Chairman. The other was announced by a very powerful finance minister based on the work of an incredibly distinguished committee over a year. Liikanen has dominated the debate about banking structure in Europe, in Berlin and Paris and elsewhere for the last year or so. And so if you're in the public, if you're in the media probably, possibly even for some of the people in the financial sector, this would appear to be the headline stuff. But the truth is that if you were in the top table of the international bodies and you were trying to cascade those international policies down to national regimes for solving the problem of too big to fail, they're subplots. And yet the main plot that's come out of the Financial Stability Board, whatever its merits or demerits, I'm not making a point of substance at all, doesn't get anything like the same degree of coverage. People could be forgiven for really not knowing what's going on. And there's a dilemma here because it amounts to domestic policymakers, for completely understandable reasons, wanting to prioritize in public presentation the thing that they uniquely own. And this, I think, is an uncomfortable illustration of the tension or trilemma that Danny Roderick identified more than a decade ago between globalization, autonomous nation states, and democracy. Can we have all three? And the way this turns up in the financial stability field is, can we have national control over financial policy, international financial regulation, and financial stability? And Dirk's right. We can't. But what Dirk doesn't bring in is that if we can't have national control over financial policy and we want the other two things, is, as Dani says, is democracy in jeopardy. And so there are three, in the kind of scholarly literature about these kinds of things, three types of solution are typically identified, none of which is terribly attractive. The first is that we give up financial globalization and thereby sustain democratic control at the national level. What's interesting about that is that it was rejected at the Washington summit in 2008. It was Ted who reminded me yesterday that it was Washington. I thought it was Pittsburgh. And it just shows that Ted was a better international official than me. And I want to get that on the record, Ted. But I still think that Pittsburgh is important because, in a way, in Washington 2008, they're in absolutely the midst of the crisis. therein, my God, can we save the world from falling over the edge of the cliff in the next few minutes, or certainly the next few days? And they reaffirm themselves. They affirm their commitment to openness. I think it's tremendously significant that they came back and did so again in Pittsburgh quite a few months later when they'd had time to think. The other solution that gets offered is cosmopolitan democracy. And for those of you that are in the international relations field, this is kind of a pretty big movement. So we can retain international financial integration, but only if we take steps towards cosmopolitan democracy. In other words, we separate democracy from the nation state. I guess most people think that that is unrealistic. And the third option, and the one in a way that gives rise to the fears about where we are, is that we maintain international financial integration, we set financial policy globally, and we quietly accept the dilution of democracy in our nation states. And that's just wrong. I mean, it's morally wrong. It's also unsustainable, which is a different kind of point, because eventually the people would, and their representatives will notice, and they won't like it very much. And since the legitimacy of all policy making comes from, in democratic states, comes from the people and their representatives, that's a fairly big point. So with that introduction, my remarks are going to have three sections. First is, why is international policy making, stability policy making, collective? What's the legitimacy issue, and what might some mitigants be? Let me say something about why we can't get out of making policy collectively, because a lot turns on this. And I'm not going to spend a great deal of time on this, because I suspect that most of you are convinced of the point. But I'll give three examples, one of which is about monetary policy spillovers. We've bumped into something which we should always have known, but perhaps were in cognitive denial about for a long time, which is we tended to think, in a world of floating exchange rates, the relative price of two monies, if I set my monetary policy and you set your monetary policy, the exchange rate will adjust, and that's the end of the matter, really. And you have some domestic choices to make, but they're your domestic choices. I'm not really interfering with your state of affairs. And the carry trade blows that out of the water, really. And I can remember a time a decade ago when people would argue, responsible people would argue, that the carry trade can't really exist, or it can only be an ephemeral phenomenon, because it's irrational, really, and surely UIP holds over time. But Marty Eichenbaum and others have documented pretty well that you can make systematic returns from the carry trade, and of course it's actually enormous. And so the story about spillovers from monetary policy isn't as simple as we thought it was a decade ago, certainly 2 decades ago. A second example is, excuse me, that if I've got a weak national balance sheet, as I call it, a weak internal structure for my financial system, and a vulnerable structure for my external liabilities, my mix of assets and liabilities, you might think that's my problem. These are domestic choices. They may inflict real pain on my citizens, but then the citizens will get rid of me through the ballot box, or if there isn't the ballot box, in some other way. But actually, if the country is big enough, and it doesn't have to be very big, it can spill over to its neighbors. Having a really weak national balance sheet can be to inflict pain on others, and those economic neighbors may be a long way away. I'm going to come back to those points, which are really about the structure of the international monetary system, towards the end. Let me now move to the third example, which is straightforward kind of banking spillovers. It's just over 40 years ago that Herstatt failed. Bankhaus Herstatt, a bank domiciled in Germany. As far as I know, and some of you may correct me, I don't think it had a physical presence anywhere else in the world. It didn't really have businesses elsewhere in the world, but it did quite a lot of foreign exchange transactions. And on the day it failed, it was due to receive Deutschmarks and pay dollars, And of course, there's an ocean between the continent I was brought up in and the continent I now live. And the Deutschmarks had been delivered in Germany, and then Herstatt closed, and it hadn't quite had time to deliver the dollars that it owed. And this was absolutely cataclysmic in the financial system in 1974. It's what gave rise to the Basel Supervisors Committee. It also gave rise, and this is the point I want to dwell on for a second, it also gave rise to a division of the governors of the G10 agreed an informal division of labor amongst them on lender of last resort. And it's a marvelous symbol of the times that announcement, it was announced, is half a page long. There were some virtues to that world. But what this division of labor didn't really put up front was it was that the local central bank, the host central bank, should take immediate responsibility for local liquidity shortages. And you might think, well, local liquidity shortages in the host central bank's currency, because it can print its own currency. But it was actually a bit more subtle than that. And it was able to be more subtle because at the time there existed a widespread network of swap lines amongst the central banks that existed until the 1990s and very foolishly was disassembled in the 1990s and was reassembled in a great hurry during the latest crisis. And the ECB, the Swiss, even the Bank of England at one point borrowed dollars from the Federal Reserve because there was a dollar shortage in Europe. And what this gives rise to is the following, and I don't think this has been played out much yet, which is, what if you can't get a swap line from the Fed or from the ECB or the Bank of Japan or one day from the Central Bank of China? Well, then you either need to have quite big foreign exchange reserves, or if you haven't got those, then you need to prevent your banks and other parts of your economy taking big mismatches in that currency. And if you don't do that, if you nevertheless allow, say, your banking system to take a big mismatch in dollars, but you haven't got any dollar foreign exchange reserves and you haven't got a swap line, well, then maybe that's your problem. But if you're big, maybe it's not just your problem. Maybe it's the world's problem. And so we haven't yet seen what the response of the international community will be to what are the constraints on the national balance sheets of significant countries who cannot arrange swap lines with the world's major central banks and who don't have very large foreign exchange reserves. That, though, is actually the easy bit. The tough bit came with the failure of Lehman. So we imported the subprime crisis and the Lehman crisis from America, and then we re-exported to America the Euro crisis and the Northern Rock crisis and the RBS crisis and various other things. And this gave rise to a huge program, which I was involved with, central counterparties, minimum margins on derivatives, more capital for banks, policies on shadow banks, policies on cross-border resolution. And the point is that every single one of those policies was designed around the international table rather than in national capitals, which is what hasn't really been revealed to the citizens of the world. And further than that, the men and women in the Basel Tower took a massive decision. They decided for the first time to check compliance with these standards. And the committee that's been most active in doing that is the Basel Supervisors Committee. And so now I'm going to start to bridge to legitimacy. And my friends in the Econ Committee of the European Parliament did me a great favor last week by issuing quite a pointed press notice. And when I say that my friends, I actually do know a lot of people on that committee and have worked with them very closely in the past. And they're good people and they're very knowledgeable. And this is their response to the Basel supervisors' peer review of the EU's faithfulness in implementing Basel III, which was found to be materially non-compliant. And what they say, this is the Parliament, not the Council of Ministers or the Commission. A large majority of members of Parliament cannot accept that the Basel Committee puts into question the tools to finance the economy. They then go on to say something about SMEs and households. Even if we were aware of the necessity of international cooperation, which actually is a splendid whereas clause, the European law is made by the European Parliament and the Council of Ministers. The opinion of a body that is working without legitimacy, my emphasis, not theirs, and without any transparency, cannot modify the decisions taken democratically by the European institutions. Now, those of you that not only live in America, but don't follow European affairs closely, and some of you obviously do, especially Nicola, you'll be thinking, what's going on here? Well, the way global financial policy gets implemented in the EU is fundamentally different from the United States. Something like the Basel Capital Accord finds its way into primary legislation in Europe, agreed jointly by the Council of Ministers and the Parliament. There are two drafts of the legislation and then a trialogue involving the Commission, rather like between your House and the Senate. And more than that, when, and this is the really key bit, I think, when in Europe the specialized regulators, the European Banking Authority, the European Securities and Markets Authority, and the insurance equivalent, when they add detail to all of that, when they drill all the way down, those texts are subject to veto by, separately, the Council of Ministers, which is a kind of multilateral body, and the Parliament. So in one sense, the Parliament's response to Basel is slightly strange, because this is their choice and their right, and they merely have to weigh the consequences of other countries being concerned and wanting to protect their banks more against exposures to European banks. It's rather different in the United States, and I'm going to dwell on that a bit later. But we shouldn't think that these issues don't arise in the United States either, and Ted knows hugely more about this than I do. The BIS was founded a long time ago. Federal Reserve didn't take up its shareholding, or its option of a shareholding, didn't join the board of the BIS, but in the 1990s it proposed to do so. And when that went in front of Congress, one of the members of Congress, one of the subcommittee chairs, expressed concern about whether this would put the Federal Reserve at some point in time in conflict with the domestic independence they exercise. The Fed did join, by the way. I sat next to the Federal Reserve members of the BIS board. So what's going on here? So unless we all revert to autarky, which on the whole I think would be a bad thing, but it doesn't matter what I think, it matters kind of what the people think. And as long as we don't, then it seems to me absolutely unavoidable that stability policy is going to be made in large degree in international fora. If you like, stability is an internationally produced public good. It's a fact of the world. Who knows whether it should be a fact of the world, but it is a fact of the world that those international standards are drawn up by officials from domestically independent agencies. So you can think of this as triple delegation. There is delegation from the people to their representatives in Congress, in Parliament. Those representatives then create independent agencies, the Federal Reserve, the SEC, the Bank of England. Those independent agencies then go off to the Basel Tower or to IOSCO meetings in Madrid, and they decide what world policy is. So we've kind of traveled quite a long way from the people. So what should the criteria for legitimacy be? And I'm not going to dwell on this very much. I mean, I'll say something about the third and fourth. First of all, it seems to me that we need democratic endorsement, and by endorsement I mean something quite strong, of either the independent organization itself or of its policies, those of its policies that are binding. So in terms of democratic endorsement of institutions, that's what we have for the IMF through a treaty, that's what we have through the Federal Reserve, through a statute. Those things can always be amended, and I think it's important that society keeps those things under review. Where the organizations themselves aren't created through a democratic process, through a majoritarian process, then I think we need the policies themselves to somehow bear the imprimatur of a democratic process. Secondly, it's obvious that international organizations should be subject to the rule of law, should not abuse human rights. I think that's more important in other areas probably than it is in this area, but nevertheless it could be important in this area too. Thirdly, policy formation and output should be sufficiently transparent to benefit from public debate and scrutiny. And for those of you that are not so much involved in economics, but in international relations or political theory, there's a genuflection here to the ideals of deliberative democracy. That if you delegate to experts, these are not Platonic guardians, or should not be Platonic guardians, who reveal the answer after their own entirely private deliberation, although some parts of that deliberation may need to be private at times for the reasons Adam says, but they should put it out there so that there is rich public debate and understanding of what's going on. I will come back to that. I do not think that enough is being done to meet this criterion at the moment. And finally, if you're going to have these independent agencies fly off to Basel or Madrid and make these policies, then the results should be an improvement on what you could get through a more domestic, democratically rich process. And, I mean, that's rather the same as a test for an independent agency of any kind. Whereas you can think of intrinsic justifications for democracy, justifications for independent agencies have to be instrumental as well. They have to deliver better results than would a purely majoritarian process. And the two obvious benefits are that you can get closer to credible commitment and you can escape capture. And I will just, in the context of international organizations, I'll just dwell on the second for a moment. I think I have sat at the table and seen national officials be able to escape the reach of national lobby groups that they wanted to escape and that their domestic legislature didn't want them to be captured by. So there is a subtle point here. Congress sometimes shapes legislation so as to tilt the table in favor of one interest group or two or three interest groups. I'm not talking about that, because in a sense that's been democratically arrived at, whatever one thinks of it substantively. I'm not talking about that. I'm talking about national officials finding themselves more able to escape the clout of a domestic lobby group by sitting at a table with others, because others around the table aren't sensitive to the particular wishes and interests of that domestic lobby. And I think this really needs to be weighed by people who are concerned about the international process. So I think there are two kinds of condition which can deliver a fair degree of legitimacy to international standard setting. One is the independent agency has full discretion to implement the international standard, subject to full and proper domestic consultation, for those of you that are Americans, notice and comment rulemaking, and also that the agency is acting under a domestic statute that frames its purposes and goals in a clear way and ideally sets a substantive standard that should run through the agency's rule writing. And I think, for what it's worth, that in the United States, it's pretty clear that since the Administrative Procedures Act and the accretion of common law, the first condition is largely met. I am not sure that the second condition is always met, because the objectives of many agencies are vague, protect investors, and very few statutes incorporate a substantive standard. In the environmental field, there's a very interesting example from the 1970 Clear Air Act, but I'll leave that dangling. The other way, I think, to kind of incorporate some democratic legitimacy in implementation of international standards is more or less what's done in Europe, which is the international standards either get incorporated in regional national law by the legislature or subject to veto by either the executive branch or the legislature. I'm not sure that that route would be realistically available for the kind of federal government in the United States, which goes back to the first thing. I have a concern that, this is a long-standing concern that others have shared, about the vagueness of many of the objectives of the statutes that delegate authority to independent agencies in this country. So how about some solutions? And this is going back to where I started in a way. So first of all, international standard setters should consult openly, encouraging responses from far and wide. And actually, the thing I would add to that is often they need their international consultation to somehow be dovetailed with the domestic consultation. There's no point reaching an international agreement only for a domestic notice and comment process to reveal that that country can't actually legitimately implement the international standards. So you need some dovetailing of the two. The second is that the chairs of the key international groups, and I don't just mean the headline groups, FSB, Basel Committee, but a lot of the heavy-duty work is done in subgroups. They should give speeches wearing their international hats, explaining of the evolution of the group's thinking. And I simply don't think there's enough of that. And when indeed, some people do it. If I can pick a name, I think Stefan Ingves does it. I think years and years ago, I think Peter Cook did it when he was chair of the Basel Committee, which is probably why it came to be called the Cook Committee. But he didn't actually, at the time, he didn't have any other domestic duties in the Bank of England. But I don't think enough of this goes on, and I've felt it since I retired. There was, on one major area of policy, there was a long period of silence during 2014. I understand why there was a long period of silence, I guess. I'm guessing, but I guess there were fairly tough discussions going on. But I don't think it was sensible that there was so much silence. The issue should have been aired a bit more in public so that we could see what was going on. Sorry? Oh, the stuff that came out of Brisbane on TLAC. So drafts were, it is said, I don't know whether this is true, it is said that drafts were leaked and that the industry around the world knew what was going on, but I don't think other commentators knew what was going on. By the way, I don't, I don't mean that I felt that personally, on the contrary, which is why I didn't give the example. I did that, finished, a bunch of other people have taken it over, but this was, the centerpiece of what came out of Brisbane on financial stability, and it should have been a bit more open in the months ahead. Thirdly, and I'm going to have two bites at this, I think domestic agencies should do everything they can to ensure that there's domestic understanding of where their policies are coming from. I think, in a way, domestic agencies need to resist the temptation of it was invented here. When it was invented here, that's absolutely fine. When it wasn't invented here, be open. I mean, not in the sense of credit for it, because we are doing this because we are better off, because we're trying to do the same as everybody else. To give you a concrete example, in the Bank of England, there were big debates about where the capital levels for banks should end up. And an argument I put a number of times to my colleagues is that we, the UK, would probably be better off with everybody having a capital standard of 10 than the UK having a capital standard of 20 and everybody else having a capital standard of 5, if we retained London as a financial centre that was intimately connected to everywhere else in the world. Those weren't the numbers, by the way, and I actually argued for a higher number than 10 and more or less got it. But it's to illustrate the point. Whoops. Now, this is the next one is a tremendously important point. You will have heard agencies in this country, some commissioners of the SEC say this, which is we can't agree to these international standards because we only have one representative there, and when they come back, we've got to have a vote. And they simply can't commit the agency. And therefore, Going to international meetings, this is my interpolation now. The first bit is a fact. My interpolation is, and therefore going to international meetings is very interesting, but we're not really doing international standard setting. What we're doing is international information exchange, and we will set our own standard in the light of that information exchange. And what I would say is the following. Well, agencies either need to shift their decision-making process so that they can, in real time, either delegating authority or having meetings during the night or during the day. And we did a version of that in the UK. Adair Turner and I were at these meetings together, and we'd say to each other, do we need to consult Mervyn? Do we need to consult George? And we were very sensitive to that. And one could do that more formally. But the key point is this, is that if that can't be done, and perhaps it can't, then I think agencies are under a democratic responsibility to go to their legislature and explain the problem that they face, including explaining whether or not they can fulfill the mandate that Parliament or Congress or whoever has given them without being a full party to international agreements. That's the nub of the matter. And then, while I'm on legislators, I think when they testify, I think national policymakers should be completely open with their domestic legislators about what's going on in international policy. I mean, one of my experiences, and I've observed it here, is that people go along to Congress, to the UK Parliament, elsewhere, and talk entirely about, or almost entirely, about the domestic initiatives they're taking under domestic statutes, because that's somehow what's going on. And yet, shouldn't the legislators be told what you're up to? And then crucially, and perhaps most unrealistically, the domestic legislators should be open with people, the people they serve, about the extent to which they have autonomy in policy and the extent to which it's a shared effort. And I'm deliberately ending up there, because when I've discussed this with others, people have said this is completely unrealistic. They've got no incentive to do that. And I see that point. But what kind of democracy are we each living in if the people that we elect won't tell us things they know about where the policies that affect the people in the past I served are coming from? So that's the big dilemma, but people can solve it somewhat by being more open. Now that's about standard setting. Let me flip back to the examples I gave of the international monetary system, and I'll wrap up. If there is these spillovers from monetary policy and from national balance sheets to others, then countries need to do something at times dynamically to make their national balance sheets, their financial system, more resilient. And the good news about that, this is macroprudential policy. The good news about that is that it means countries aren't defenseless and can serve their citizens best under their national mandates within the scope of the international regime. The challenge is that in seeking to avoid spillovers from weak national balance sheets, their mitigating measures can spill over to others. And as yet, little has been said about how policymakers will cooperate or coordinate on this. And in this respect, monetary policy really is different. So the exchange rate really is a shock absorber. It's not a perfect shock absorber, but it is a shock absorber, whereas it's not obvious that national macroeconomic policies have any counterpart, or relative national macroeconomic policies have an easy counterpart to the exchange rate. So I suspect there will need to be more cooperation and coordination, and we haven't heard anything about that yet. I don't think we should be greatly concerned about that now, but if we're in the same position in 2 years' time, I think we should. I'll stop there. Thank you very much.
Well, good morning. Let's see my way through these things. I'm going to address you properly at the beginning, but not at the end. Sir Paul Tucker's ruminations on the role for national democracies in reforming the international monetary and financial system are both stimulating and taxing. They stimulate us to think and tax us to re-examine what we think. And he gave an excellent summary of his thoughts. I don't want to rain on his parade, but in some sense, I think his issues that he raises are both more and less important than he conveys. I'm going to step back a little bit from the, if I may put it that way, narrow concepts of regulatory policy to broadly, in the sense that they're more important because they lie at the heart of the current lack of trust in national governments. And they are less important because the democratic challenges of collective regulation in the national financial system, quite frankly, not that they're not important, probably don't make the top 25 of my list of international issues. So, for example, here in the United States, the legitimacy question is at the core of the current furor over the methods and behavior of the police. And without trust, there is no legitimacy. And in Europe, a recent survey of citizens of 10 countries, less than 20% said that they trusted the current government to manage their public finances. These are the national governments. And you don't have the trust locally, you're not going to have the trust internationally. And so that's the sense in which I think these issues are much bigger or symptomatic of much bigger issues. And I'll come back to that a little bit. Now, I would like to quibble a little bit with Paul's. It's understandable, even though he spent a whole year in Boston, Massachusetts. He doesn't have a complete understanding and appreciation of the U.S. political system. There's a famous quote that I always like that a resident of Boston said, "I'd rather be governed by the first 25 names in the Boston telephone directory than by the faculty at Harvard or MIT." And you can probably say the same thing at New Haven, by the way, just to make equal time. So I think in a way, I'll illustrate this later, in a way, the European system is different, right? Precisely because it's already got this... And maybe if you want to think about comparisons, if you really want to think about these kinds of comparisons, which is only a subtext of what you're talking about, they have more to do with sort of the United States and Canada and Australia and Japan, which are more comparable to the United States than the European Union, which itself is a curious structure, is its own curious structure. But the basic problem that financial stability is highly desirable, is jointly produced, global public good. Countries are net beneficial from the successful efforts, even if there's a dilution of democracy involved, and therefore you need to try to cover up this, deal with, I think, this dilution to enhance the legitimacy of the overall effort. He makes a number of suggestions in this area, and here I'm going to ask more in the way of questions rather than comments, and so that gives him a chance to respond later. So he suggests there should be a democratic endorsement of the relevant international organization if it's created by a treaty, which I would say comes from the fact that the treaty is passed through the legislature, or of the processes used to establish the international policy agreement, where they're not submitted to parliaments. So the question, thinking about this from a U.S. perspective, is whether in the United States what he seems to be implying is that at a minimum the Federal Reserve participation in various international standard-setting bodies or other groups should be explicitly included in its mandate. This is where some differences arrive in interpretation. I would argue, and I'm sure the Federal Reserve argues, that the existing financial stability mandate of the Federal Reserve, even though it's only one sentence, does this. But he may be, I think Paul probably is endorsing a continuing process of transparency and accountability, which certainly is or should be part of the Federal Reserve's approach. Now, second, he suggests that the organization should be subject to the rule of law. And I assume it's a little unclear, those are where questions come up. This prescription applies to organizations like the Financial Stability Board and the Basel Committee, as well as the International Monetary Fund. However, I'm not sure exactly what he means in this context by the rule of law. Is he speaking in narrow, if I may offend the lawyers, terms of international law, or does he mean the processes and the procedures should be open to various forms of public scrutiny? Third, he advises that policy formulation and output should be transparent so that the societies can decide whether to maintain their participation in the organization. I have no problem with this. I understand it. I'm not quite sure how it differs from the second criterion, so we can explain that. And fourth, he would require that the outsourcing of policies promoting stability to ad hoc groups should demonstrably produce better outcomes than if this activity were left to national policymakers, which at least would bring the locus of any demographic deficit back home. And in the background paper, he calls this the instrumental or consequentialist test. And I'm not quite sure how it should be operationalized. It reminds me of the EU principle of subsidiarity, and I've never understood how that principle is applied either. So maybe that's just puts me back to where I was starting from. Now, he does offer some approaches to independent national authorities involved in operationalizing agreed international standards, and he argues that the agents should engage in a full and proper domestic consultation and act under a domestic law that sets a substantive standard with respect to its rulemaking. Or it's not quite clear he wants both of these things or only one. Incorporation of the standard into domestic regulations should be subject to the veto by the executive branch or legislature. And in his comparisons, as you saw, he thinks that the United States fails and the EU passes. And I'm not quite sure about that. In some sense, the Federal Reserve follows the Administrative Procedures Act, and when it passes regulations, of course, it always follows the law, at least as it understands it, and it has plenty of lawyers to help it understand it. Although their regulations are not, strictly speaking, subject to veto by the executive branch. I think there's some exceptions, actually, currently, in terms of consultation. They can always be vetoed by the Congress, and the current exercise, if you want to put it that way, with respect to the 716 derivatives provision of Dodd-Frank are an example of a congressional veto. It is, in some sense, more the law that was passed than the regulations, but in some sense, if the regulations had been drawn up differently, it might not have been required to have been vetoed. And in well, you could argue there are different kinds of vetoes in the European system as well. You know, individual countries can decline to follow regulations, and even when it's a question of directives of not passing the national legislation. So I'm a little bit, these are a bit of quibbles of more of a political science-y stuff than otherwise. But, we have to educate him. We have a very complex system, and you have to study it for many years, Paul, before you really appreciate all the complexities and subtleties. And don't, and we admit it's somewhat less than perfect, like about 5% of perfect. I have fewer columns and questions about his advice or solutions. Yes, the international standard setters, yes, they should be open, consult widely, openly, and provocative and proactively. And I think there was some of this, and then there was less so, and now there is more and should be more. I suspect that Joe Marie will beat on this one. Yes, the consultation and transparency should extend to domestic stakeholders. It is desirable to reconcile as much as possible domestic decision-making process and content with international policymaking. I did not until actually I saw it, he has a background paper, understand what he was talking about conference calls. I now understand. about what he was referenced to conference calls. This is, by the way, just in another field, it is a problem that is faced by central bankers who go to G20 and G7 meetings too, because they always governors of the Bank of England or the ECB now, or the olden days the Bundesbank or the Bank of Japan or the Fed Reserve can say, well, I can't commit my FOMC to doing anything, and it'll be an interesting discussion. The next FOMC meeting, Stan, you can raise this possibility of whenever the G7 meeting is, everybody should stand ready to have a conference call with the chairman to see whether she can commit to the chair, so she can commit to raising interest rates or lowering interest rates or something like that. That'd be a nice discussion. Maybe you should do it over lunch or something. So in summary, I have questions and qualifications here, and this is all very provocative. I do wonder one question, right, more substantive. Why did he sort of rolled together treaty-based organizations and voluntary organizations, non-treaty-based organizations, and one solution would be to take for the national financial issues and put them in a treaty-based organization. I'm blushing when I say this. For example, if the Financial Stability Forum, now board, had been placed within the International Monetary Fund, as some at the time wanted, didn't they, Stan? Its legitimacy, presumably, would have been enhanced. Going further, if international agreements supporting financial stability had the same status as trade agreements that are overseen by the World Trade Organization, would not some of these concerns drop away, if not be reduced? My answer is some, but not all of them would be reduced. And you can think about, now this is coming to the end, about the IMF. The IMF is a treaty-based organization, but that fact doesn't help us when it's certainly not being treated here in the United States with appreciation, respect, or support that it deserves, according to most of us. And that it obviously means you need to do more than enshrine the IMF in the U.S. law to expect the Congress to continue to support the organization decade after decade. And I think this means that actually the previous administrations faced a lack of understanding and trust of its policies in the fund, which sadly undermines support for it. So in both the formal and informal organizations, you clearly need to gain greater trust for the activities of governments in the purely domestic areas, such as well as in the purely domestic areas, such as the behavior of police. And we need transparency and accountability, which I don't think Ball disagrees with. It's motherhood and apple pie. And I would add, and I think this is implicit in his remarks, these processes have to be proactive, right? Because they have to involve more attention to education and examination of ex post results. And this is probably what Paul means by his consequentialist ex post test. So this is a very stimulating set of remarks, and I'm going to now try to embarrass the next speaker. Because some years ago, Joe Marie and I about a decade ago, had a big brouhaha. We had a heated debate about whether the procedures and processes that were followed in choosing the managing director of the International Monetary Fund were legitimate, right? And we exchanged email. We fought out at a meeting. We exchanged emails, and I think we concluded, Joe Marie, a lot depends on what you mean by legitimate. Your turn.
I think that was an illegitimate use of a prior speaker's position. Thank you, Adam, for the invitation, and Paul, you did provide a challenging and provocative paper. You used some Britishisms I had to get out of thesaurus to translate. Yeah. Thank you so much. let me just jump in and say that I think you've raised interesting questions that are important for US and EU and UK regulators. I think you left out a huge chunk of the world. Yeah. So I care about the poorest and the least and the ones not in the room. I like to ask who wins, who loses, who decides. And I care about the losers, and those who decide are usually the winners. So I think this is a problem, a set of issues that are very important in the older democracies, but I think there's a lot more work to be done beyond. Now, let me just say that, let me open with the three issues that you opened with. Should we give up globalization? Should we search for cosmopolitan democracy? Should we settle for a dilution of democracy? Well, I think that this unmitigated support for absolute openness for finance should be open for question. At one point, you suggest doing a cost-benefit analysis of the costs and benefits of free flow for finance. And I think that's a serious question. It's very unpopular among folks in this room, I'm sure, but I think it's a question I think we should keep open. And secondly, on cosmopolitan democracy, no, I don't subscribe. When I was policy director at Oxfam America, I wrestled with this issue where shouldn't we have a single global government and one citizen, one vote? And I got, oh, what a mess that would be. So I'm not talking about that, but I do think that you have to have everybody in the room somehow. I think the Financial Stability Board and the G20 are an improvement over the G7/G8, but if you talk to the Nordics or to Chile, as well as 90%, 99% of sub-Saharan Africa, there's great discontent. I do want to go back to the Financial Stability Board, one of the few people in the world that I think cares about it. But we really are encouraged by much of what is going on with the Financial Stability Board. On the dilution of democracy, I think that what we have seen in the recent midterm election in this country and in the passing of this bill, the interim budget for the United States, we are seeing a huge dilution of democracy. It's $1, one vote. And I think that is a gross distortion, and I think that is not unrelated to the free flow of finance. So I think democratic politics are under severe stress in this situation. Now, going more to the overall paper, I would say in defense of the United States that I can't speak for the EU. I think that we have in the selection and in design of our agencies, our independent agency, the officials are selected by the president, confirmed by the Senate. They get a hearing. They get roasted in their hearing. I don't know if Stan went through that. I missed that hearing. There are regular oversight committee hearings. They do have a limited legal mandate and specific terms. If you're not liked, you can get pushed out by the Congress or elbowed out by the president. Internationally, I think the U.S. is constrained or fettered appropriately by the Constitution and by laws. And I would say that sometimes the United States provokes others into acting internationally. And it's the power of the first mover in terms of setting international precedents with Dodd-Frank and with FATCA, and I had to remember the translation thereof, Foreign Accounts Tax Compliance Act. We've just gotten used to FATCA. These are first movers, and they've provoked a lot of international change. In fact, on the FATCA level, we think that it probably provoked the whole base erosion profit shifting stand that is still in process. So those are some things where the U.S. leaps out in front. Everybody gets mad at us and says, oh, you shouldn't do that by yourself. And then they say, well, that's a good idea. I guess we'll catch up with you. So, you know, that's could be democratic or not. But when you look at democracy from a global perspective and the excluded folks, the small economies, and especially the poorest, are excluded. And whether we look at I said the FSB is getting better, and I'll revert to that. The IMF governance, Ted and several others of us, many of us, have worked. I've worked for 25 years on IMF governance reform. I'm getting more tired than Ted on this issue. It just goes on and on and on, and you think you've had a tiny incremental increase, and then you're slapped down again. So the 2010 agreement, which is causing such angst in this country, or should be, is absolutely a minimum of what we are pushing for in the civil society, those of us who worry about and obsess on the IMF. So that has to be improved. And the IMF is improving in some other ways, and I've told them so, but I don't want to embarrass them by praising them in public too much. What I would say is that in this, looking at the systemic democracy, again, not exactly one person, one vote, but somehow adjusting representation and inclusion, we do need to look at the costs of lost wages, lost homes, of financial crises, and say, is this worth the gain? I think it's a serious question. It's not popular politically, but what the heck, that's my job. I do welcome, for example, in looking at transparency and legitimacy, in the writing I've done, we think about transparency, accountability, responsibility, and complaint mechanisms. So on transparency, we do have greater transparency, for example, in the Financial Stability Board. I would say that what is happening is there are regular public consultations on any major paper in the Financial Stability Board, and part of what we do is try to promote an awareness of those consultation periods, encourage lots of groups to participate, and we salute the FSB for then publishing all input they have received. That's great. The ex-ante impact assessment would be one aspect of accountability. Do you know what you're going to do? Can you anticipate what you're going to do to the poorest people by your decisions? The FSB or the IMF or anybody else has to think beyond the U.S. and the continent of Europe. We have to think, or you have to think, about what are you going to do and what does it mean for the poorest? They don't have defenses. There's a great poster. It says, pedestrians don't carry an airbag. The poor of the world don't have an airbag. They don't have the protections that we presume. So it's incumbent upon these institutions to do that kind of ex-ante assessment as well as ex-post. Ex-post may be too late, you know? In some lives, the situation is too fragile. You can't look ex-post. You can't put children back in school if they've been out for 3 years, okay? You can't catch up that way, or if they haven't had their vaccines. In terms of inclusion, I've talked about representation of various countries. Again, my example is Financial Stability Board, the regional consultative groups. We harped on them. We have pissed and moaned to the Financial Stability Board. We don't know who's attending. All we get is a post facto press release of the countries that attended. Yawn. The agenda that was discussed, nouns, not verbs. We don't know what they talked about. So we want greater transparency, and it's beginning to happen because the participants in the regional consultative groups are taking hold of the mechanisms and going public themselves with their own position papers. So that is a welcome process. You invite people to the table, they'll come. And they're very smart. Not all of them, of course. So we are seeing some progress. What I am puzzled by is that these institutions should be subject to the rule of law. And I don't know exactly what that means. I would love for it to mean that all financial institutions must ensure that all their actions are in no way infringe on the ultimate international law, which is the human rights. Civil, political, social, and economic, you name it, including torture. Oops. That's United States. Well, we'll skip that one. But they really should be, how do you assess that your work is promoting, if not reducing, the respect and the implementation of human rights in the entire global finance, not just in the financial markets of the UK, EU, and the United States? Thank you very much for the opportunity to speak. Usually I get one question and no comeback. Thank you so much.
Thank you, Jo Marie. Thank you, Ted, and thank you, Paul. We're privileged to have with us this morning Vice Chairman of the Federal Reserve, Stanley Fischer, who, as Paul mentioned, has been writing and thinking about these issues in practice for a while now, and Stan has agreed, or volunteered, in fact, to give us a couple comments.
Thanks, and thanks, Paul, very much. I didn't know.
While Stan's talking, can I invite our three speakers to come up to the stage? Sorry.
I didn't know what you were going to talk about this morning, and this is really extremely interesting and important. I'd like to just talk about one example of why this is a very complicated issue, and maybe more complicated even than one thinks at first on first thoughts. And I'm going to do it by talking about the FSB. And if you talk about the FSB, you've got to talk about the G20. So we'll go back to the G20. The G20 was set up to circumvent the IMF, period. It was set up by the United States. It's the child of a G22, which met in 1997, 1998, something like that, maybe as late as 99. It wasn't after 2000, because I remember that the band played Hail to the Chief as President Clinton arrived for the first meeting of this group, which I wasn't sure was the opening tune you'd want at a meeting of an international group, but it made the point. Now, there was a good reason for wanting to circumvent the IMF and a bad reason. The good reason was to change the composition of what one can call, and what I think Fred Bergsten called, the executive committee of the international system, which was the G7, and that was clearly non-representative in a very obvious way. And the G20 grouping is a better grouping in terms of representation of the great mass of the world's population. That was a good reason. The bad reason was you wanted it to remain very flexible. I translate the word flexible as weak in that context. And the proposal was around for the powers who control the IMF to grasp the nettle and change the composition of the board of the IMF, and with one big aim, which was to reduce the European dominance of the board of the IMF. You didn't grasp the nettle, you decided to go around. And I think that was a bad reason. But there is the G20. Does it work? Well, it's not clear. It is clear that the countries that have been added feel very good about it. It has a lot of peculiar features, like every country can seemingly, every host can add somebody who clearly doesn't belong to the meeting, and things like that that I couldn't quite figure out on what they based. They're certainly not based on legislation. It would work much better if every country involved had thought about the role of public goods in the international financial system. There are some countries there that use it to promote their national interest, and there are some, regrettably few, who think about how the international financial system should be designed. And I think that is a weakness. Now let me go to the FSB. It was born out of the G20. Number one, was such a body needed? Yes. Could it have been done through the IMF? Yes. Was the idea put forward? Yes. Why was it rejected? Because of the bureaucracy, and it would have involved representatives of all the countries in the world being involved in all sorts of things which are extremely inconvenient, but they happen to be associated with the more representative world. Now, early reaction. When I was governor of the Bank of Israel, we received a letter saying, would you please send us all the reports that have ever been written on your economy, because we're coming to inspect your financial system. Well, we got a group of 10.
Who from?
The FSB, from you. So we got a group of 10 small country governors together at Basel, which opened with the reply that the governor of New Zealand had sent to the FSB. He read out his letter. As far as I recall, I am not a member of your organization. I have asked my staff to search the archives. If it should turn out that we've overlooked the invitation to join your organization, we will send you the reports you request. We 10 governors explained to Mario and Svein Anderson that this was a problem, being inspected by a group you didn't belong to. And this is along the lines of what Mary Jo just said about the rest of the world. Now, we were not poor countries, but we were unrepresented countries. Well, to their credit, Draghi and Anderson, and I don't know how, came up with the idea of regional groupings, which is to say there would be countries who were not in, but who were definitely not out, because twice a year you'd meet with the countries, selected countries in your region would meet with the FSB, and of course among the selected countries were the 10 countries who had complained. And we were there, and the FSB, displaying a talent that the BIS really has, managed to turn that into a huge addition to their workforce. We were all required to join groups, write papers, et cetera, and it did what it was supposed to do. It got the countries who complained involved in FSB processes. Now, is the FSB a success? I think it's a great success. Is it democratic? No, in a certain sense. Yes, in trying to reach out. And I think the consequential test of polls is very difficult to apply in a world in which parliaments are very busy, the issues are quite abstruse, I don't know, they're very complicated. Whether the public really cares about GLAC and all sorts of things like that, I doubt. Whether they care that there is some damn rule that's irritating them like hell and costing them money, yes. And the consequentiality is you have to behave in a way that makes you makes you aware not to do things which are just obviously not sensible. And I'll conclude with how I think of that. We changed the law of the Bank of Israel. It became independent in a meaningful sense. We make a decision, or we'd be talking about something, somebody said, we are, after all, an independent central bank, to which my answer was yes, and we are two decisions away from not being two bad decisions away from not being an independent central bank.
Yeah.
If you're aware of that,
Yeah.
you've actually got a mechanism. It's not a nice mechanism, but it's a mechanism that does a lot to get the people who are sitting there. Now, the FSB is probably too powerful for that mechanism to work well. And now let me just add a question. The other issue is the role of which again has been raised already, is the role of lobbying and powerful groups in the country. Whether what comes out, and these are hard things to say, and one has to say them carefully, whether what comes out of a legislative process in which lobbying is intensive on issues that are very difficult to understand, how to think of that except as procedurally correct seems to me very, very hard. I thought when Dodd-Frank started that the banks would not succeed in influencing it, having lost all the prestige they lost. And boy, was I wrong. So that issue is very much around, and you have to sort of say, well, as we do say, not when we're giving papers up at the Peterson Institute, as we do say, which is going to give us better results? And that's a very tough question, because it'll put our desire for democracy in conflict sometimes with our desire for efficiency. And I don't know how to handle that except to recognize that it's there. Thanks very much.
Thank you very much, Stan, for joining us and for sharing your wisdom on this. I'm going to turn to Paul to make a couple initial remarks of response to Ted, Joe Marie, and Stan. I'm going to ask him, however, to restrain the urge to rebut every one of Ted's open-ended questions so we can have more discussion.
Why don't I start? Thanks, Adam. And I think Stan has to leave, so why don't I just say a few words about what Stan said, and I can't do justice to it all. I think the point you ended with, it's not quite a trade-off, but this trade-off between democratic dilution and better results is absolutely at the core of it, which is why I included in the list of 4 criteria for legitimacy, and this would apply to domestic independent agencies as well as to the international fora. If you're going to dilute majoritarian influence in policy, you absolutely have to be confident, ex ante and ex post, of producing better results. And you have to think very carefully about what the objective is and whether the outturns are measurable, so you can make those assessments ex post. If I may say so, I think this is absolutely at the heart of the distinction you made all those years ago between objective independence and instrument independence. This is much harder for international organizations, so produce stability. What do we mean by that? But I do think it goes to this question of IMF, FSB. I mean, why was the FSB route chosen rather than the IMF route? I think it was because, rightly or wrongly, people believed ex ante that better results would be produced through a kind of smaller central staff, a more flexible process. And I've got some sympathy for that view. But what it's left the FSB with, as you both rightly describe, is a process of catch-up where there's more democratic dilution by going the FSB route, because it's G20 rather than the whole table of the IMF. And so you have to create bodies like the regional groups, and I completely agree with what you said about that should involve more than just knowing that people turned up somewhere and they discussed some nouns. By the way, I can't help mentioning that the verb-noun distinction is very American, to partner. I mean, the predilection here for turning nouns into verbs is really quite extraordinary if you come from Europe. And this may be why...
Grow your patience, Paul.
this may be why... This may be why the FSB is tripped up with Europeans concentrating on nouns rather than verbs. When I bump into them, I will feed that back. But I think Stan Ray's is about jointly produced public goods, and I don't know whether peer group pressure is the best way of pushing people towards virtue. And I'm just going to conclude with the point about lobbying, because one would hope that by being more transparent, peer pressure from outside, public pressure, would push people towards concentrating on the collective good, why you're sitting there in the first place. And I'd be prepared to take that gamble. But the process does also open up exactly what Stan says, which is you get unleashed domestic lobbying. I had never seen lobbying as on the reform of US money market funds. I had never seen anything quite like that. It was almost physically menacing at times. People would come up and talk to you kind of here. And I'm from a country whose democratic roots are pretty deep, and it didn't bother me one iota.
I'm going to take the chair's prerogative, and since this is an issue I've also worked on and had some concerns, and thank you, Stan and Nellie and everyone who has to leave. I'm just going to make two quick comments. First is, as right in describing people's motivations as Stan and Paul are, and talking about you do efficiency versus democracy and you better deliver a better outcome, I think that understates the issue and it loses something. We believe in democracies, there is a virtue to certain processes, irrespective of whether they deliver a better outcome. I mean, they shouldn't deliver a massively worse outcome repeatedly, but even then. And so I just always think of the comparison, and it's probably good Stan left, between the MPC at the Bank of England and the FOMC at the Fed. That under the current transparency and congressional view rules and all the minutes and everything else, plus the structure of the reserve banks, there isn't real discussion at the FOMC, and you have 80 people in the room. At the MPC at the Bank of England, it is really 9 people in the room sitting around a table, 3 staff taking notes, and you have genuine deliberation. Now, whenever I would point this out, people would ask me, well, does that lead to better policy? And I would always say, I would hope it would, but I can't guarantee it by any means.
I agree with you.
And so I think there is some virtue to that. I'm not saying that's the example, but it's one example.
I completely agree.
The second thing is, going back to some things Joe Marie said, as well as Stan, is I think it's very important, part of the way you deal with things, and I think, Paul, you sort of said this, but I'm going to put it a little more forcefully than you did, is you actually, if you're in office, you actually do have to stick with your legal mandate. And you and I have discussed this in the past, and it comes up repeatedly in central banking and the issue of how much you play games with the elected officials over fiscal policy. And as you know, I came out very strongly against the Bank of England playing such games. And it becomes a recurrent issue now in Japan and in the European Central Bank. And we had Peter Pratt from the ECB here 3 days ago, and he gave a very strong statement, which I happen to agree with, but I think everyone should at least look at, in which he kept saying repeatedly, we have a mandate. Our mandate is written in law. We pursue our mandate. That may or may not lead to structural reform, fiscal rectitude, well, all these other things, but it's our job to pursue our mandate. And I think that is actually something people should consider as a good role, and I think it's a role you've also believed in.
Absolutely.
That a central bank or any other very, I hate the word powerful, but anyway, important appointed official is, in a sense, play humble, that I only play the game that the elected officials wrote up for me.
I believe that very strongly.
No, just for what it's worth.
Yeah.
We have, as usual, we have a standing mic at back, we have a moving mic at front. Jessica, could you give it there? And if you could identify yourself when I ask you a question.
Thank you.
We'll let our colleagues answer at the end. Krishna, sorry.
Okay, thank you. So Krishna Guha, Evercore ISI, formerly New York Fed. So I want to pick up a little where Stan left off in terms of thinking about the deliberative process itself and how do we ensure that this actually is a genuine democratic exercise and not just an invitation for lobbying. It's certainly my observations when I was in the official sector were that it was more of the invitation for lobbying than a genuine public debate about the cost and benefits and desirability of reform proposals. And I think in that context, the official sector has a responsibility to stand for the ill-defined and diffuse public interest and not to confuse that with the type of people who are likely to come to you from both sides of the debate in a particular consultation process. Now, ideally, you'd look to the parliaments to represent, in some senses, the true all-in public interest, public discourse. But it feels like we're in a sort of, not so much a trade-off, than a low-value equilibrium, where it suits the politicians to be able to score political points, and it suits the regulators to be able to treat the politicians as infants who can't address with the substance of the issues. So how do we get from there to a high-value equilibrium where we have a genuine, substantive democratic discourse?
Yeah, and I open this up to any of our speakers who want to talk about this.
Can I have a go at that? I couldn't agree more. And this absolutely links to what Adam just said about sticking within mandates. And of course, it means that mandates need to be clear in that I don't think there's a dichotomy between ends and means, but there is a distinction. And society needs to decide where the dividing line between politics and administration is. That's a kind of what's political with a capital P is a choice. It's not kind of written in the runes. And I think what this means is that when officials or prospective leaders of an agency, a new agency, are confronted with a mandate that is vague, pursue the public interest, I think they should take that to Parliament and Congress and say, you are giving me too much untrammeled power. And I think, Adam, you're a better place to judge. I think actually Eddie and Mervyn and I were pretty good at that. I mean, certainly in the latest legislation, which reformed the Bank of England, we urged the government to take powers to give the Bank of England a remit on financial stability going beyond what was in the legislation, but subject to parliamentary endorsement, because we wanted to be more constrained, because we wanted those constraints to come from elected people. And there's a habit grown up in this country of very vague statutes. And it's I mean, there's loads about the system here which is absolutely fantastic, particularly the notice and comment rulemaking. But that does operate within a pretty wide berth if the original objective is vague. And so I couldn't agree with you more. And I think the responsibility of officials isn't then to say, I'm the master or the mistress, I'm the platonic guardian. It's to say, hold on, something's going slightly wrong here. I need to take this back in public debate to the people who should choose the objectives, because I, the unelected official, should not.
I want to make one comment and push back. I mean, I agree broadly with both the concerns expressed by your question and Paul's responses, but I guess I would push back on 2 points, or 1 point on this question of vague statutes. I mean, in our system, that's part of how we, in principle, get things done, if I may put it that way. So if you had it's slightly ironic, right? If you had coming from you, right? If you had a more precise set of articulation of the mandates of the Federal Reserve, for example, in this area, right? We would end up in less of a principle-based approach and more of a rules-based approach. It's useful within our system, we have found through our history, to actually be somewhat vague, right? Kick it to the process, to kick it to the regulators, the supervisors, or whatever independent agencies, to work it out, because if you had to fight it out on the floor of the Congress, it wouldn't work. It's like the example you cited. I think it's an important piece, by the way. Stan's piece on objectives, on objectives-based independent
versus
objectives,
instrument independence.
independence, objective and instrument independence. So where your system is fine, if you want, it works with your system. But if the United States Congress had to choose what the inflation objective was for the United States, right? As you have your governmental system works, it would be who knows what would be, and we would no doubt they'd have to do it every year, of course, right? And then they would pass a continuing resolution, which I guess is continuing the same thing. But so I'm just using that example, right? So we move more towards objective intervention. Independence in the United States for our independent agencies and other systems, and I think that's partly because of our whole checks and balances process. But it is a complicated process. I would like to believe, right, and this is actually where Joe Marie comes in. I would like to believe that the system works with countervailing authorities, right? That has broken down with the role of money, if you want to think about it that way. But when the Federalists wrote on this process, right, their vision was there would be different groups, right, and they would come together, right, and they'd be forced to compromise, and they would themselves check and balance each other. That has broken down, right, but it is not an unreasonable vision, and the question is whether it can be restored. I'm sorry to go too long.
Joe Green, do you want to say anything on this?
No, I hate to agree with Ted again, but I do. I think that the Congress just isn't, if you want the common man or woman to be elected to Congress, then you can't expect them to understand all the refinements. But we do need civil conversations between regulators and politicians, and even if it's seminars where regulators speak in plain English and also speak in plain English to the media, so that it removes sort of this high priesthood of finance. Oh, you don't understand economics, therefore you can't talk about it. I think we have to demystify it, get it in the public media, say who's winning, who's losing. So that would be sort of my addition to what's been said.
Can you be brief?
Yeah, I think this is a question of degree. So I didn't pick out the Federal Reserve as particularly problematic as objectives, but there are statutes in this country that say, here's a field, here's a bunch of powers, your objective is to pursue the public interest. There really are statutes that do that, and I don't think you should feel too comfortable with that, and I think Congress is capable of filling out some of the detail. If you take I mentioned the 1970 Clear Air Act. It set a standard at the time for one particular industry, but didn't for other industries, and for exactly the reasons you say. But what it could have done is it could have said, apply a similar substantive standard to other industries, bearing in mind the following things. It didn't do that.
Okay.
Well, that's how it's been
Morris.
used.
Morris Goldstein, Peterson. I listened to Paul's talk carefully, but I'm not sure, at least on some points, what it means in practice. So let me try and nail him down using a very specific example that he knows very well, namely this recent agreement on so-called TLAC, or total loss absorbing capital, which was agreed by the G20, I guess first agreed by the FSB and then endorsed by the G20 in Brisbane. And the advertisement for this is that this essentially takes care much of too big to fail, because a too big to fail bank under this proposal, the subsidiaries would be able to still operate, so we wouldn't get all this disruption. And second of all, instead of having to go to taxpayers if there isn't enough equity, we would have these bonds which would convert to equity. So now so that sounds pretty good, right? If you were a taxpayer or whatever, this sounds like a good thing, right? So then you say to yourself, well, but who's going to pay for this? who's holding these bonds that get converted into equity? Well, it's not banks, right? Because if banks are holding it, this could simply be a propagation mechanism. So it has to be somebody else. And the names that are often mentioned, well, it could be pension funds, it could be insurance companies. So, well, if the pension funds take the losses, then you explain this to the guy in the street and say, well, maybe you aren't going to get your pension, or you're going to get a reduced pension if there's a big loss, or a number of these happen at the same time, and your pension fund is holding these bonds, or your insurance company, or whatever. Say, well, this doesn't sound quite as good now to me. I mean, I thought I just wasn't going to have a taxpayer bailout, but now you're telling me that, well, it could mean that I'm not getting the pension or I'm not getting my insurance. Well, if they're held by hedge funds, well, maybe that's better because they're held by rich guys and let them take the hit. But I'm not quite sure that this is going to be explained quite this way to the public. It's being explained as we pretty much solved too big to fail. Perhaps this is a Jonathan Gruber rationalization for this. Well, we don't want to get into the details here too much, but how would you now, under the Tucker sort of further disclosure, more democracy guidelines, how would we explain TLAC different than I'd expect it's going to be explained in the next 3 months?
You got it.
Well, I would say what I was saying when I was in office, because although it was refined during 2014, I'm the principal author of that policy. I'd say you're absolutely right, but there are only households. So the question is it better for households to take these losses as taxpayers, or is it better for them to take these losses as holders of the instruments that you describe? And that's unavoidably a question about, are we best relying only on regulators, the agencies of the state, the supervisors, or is it better off combining the supervisors with some market discipline? And that's a big choice for society, and I present it that way. But the other thing in terms of what I was talking about is that if I was testifying on Volcker or the Vickers rule, and a senator or congressman or woman was asking me lots of questions about how the Volcker rule can sort out the world, I would say, and I would have said, can I just make clear, Mrs. Chairman or Mr. Chairwoman, that this particular domestic rule, it is not going to make too big to fail go away. It's an important subcomponent, but we can't do this on our own. We need common policies in the world. We're working on that. And so, yes, we're advocating the Vickers rule, but I don't want you, Treasury Select Committee, to think that what we can do in the United Kingdom domestically or in the United States is enough to solve too big to fail. It's part of a bigger picture, and that's the really big point I'm making, because instead everybody got the impression that the domestic initiatives, say here, were the only game in town, and that wasn't true.
Okay, we're already well past our time. Jessica, if you could give the microphone to Tom and to Nicola, we'll take 2 questions at once and then try to wrap it up.
Yeah, I think the point that Morris just made.
Identify yourself,
sorry,
please.
Tom Glessner from Gavea Investments. So we have to actually look at buying some of these securities that Morris was talking about. So I think it's interesting because in the United States, I think as banks try to deal with TLAC, I wouldn't be surprised if they issue more plain vanilla senior debt-oriented securities. When I think about Europe, and that's really my question for you, what I've seen are a lot of very complex alternative tier 1 structured securities, hybrid sort of securities with compound options embedded in them. And frankly, I kind of think they're an accident waiting to happen eventually, because everything I'm seeing suggests to me they're being mispriced right now. So that's why I think this is more really a comment. This is why I think Morris's point is interesting. And I agree actually with you. I don't know what the right approach would be in terms of who pays in the end, but I think it's something to look into.
Okay, and then behind you.
Bankers.
Yeah, Nicholas Veron here at the Institute. Maybe echoing points that Joe Murray made, the a lot of your speech, Paul, was about ownership of the process, which is one way of defining legitimacy by national jurisdictions and national citizens. But you come from a country, the UK, which for a number of reasons has unique ownership of this international system, and particularly in Basel. So really the simple question is, how have you thought of ways to make new players like China, India, etc., get more ownership of the system, and how would you do that?
Okay. So we have the big and the small. Two quick questions, and again, Paul, you should try to respond concisely, and then if Ted or Jo Marie wants to come in.
The answer to the first question is I think there are only two types of instrument that can help, really. One is common equity, and the other is regular senior debt issued from pure holding companies. And that everything else, I would want to revise I'd want to revise the Basel Capital Accord, and said so in Helsinki in 2013. The question you raise bridges to things that Stan said and others said. I mean, China and India and so on are at the table. I felt when we were living through this process that this is the last global financial crisis where the reform job is a transatlantic effort. And I urged upon my kind of transatlantic colleagues that we should all conduct ourselves in that way at the table. I think for me, this has really big implications for national policies that seek to be extraterritorial. I think that if any of our nations or regions set policies that are extraterritorial, we should expect others to do the same to us over the next 20 years or so. And I said that at one of the meetings. I think the world is changing. They are at the table. I mean, Mexico, for example, on resolution, I won't get into the substance, Mexico were terribly involved in some of the key thinking about resolution because they have a banking system that is largely subsidiaries of foreign countries. So it is not at all the case that some of the big emerging market countries were not involved in this policy making somewhere, and that's one concrete example.
I just want to add one thing, that some of the principles for cross-border banking resolution came out of a paper at the FSB in October 2011, and those ideas you will find, if you trace it back, to an African banking regulator, Louis Kazakendi from Uganda.
Wow.
Okay.
On that note,
I can't top that.
I'm sure none of us can. So thank you all for joining us. Thanks particularly to Ted and Jo Marie for grappling on short notice with real substance, and thank you to Sir Paul Tucker for gracing us with his views.
Thank you, Adam.